Good evening, friends. Welcome to part 5 of our series on UCP DC. We shall be discussing Article 18 and Article 28 in this session, Invoice and Insurance Document. A documentary credit is an undertaking, a definite undertaking, an irrevocable definite undertaking by an issuing bank to the beneficiary, saying we will honor if stipulated documents are presented and the terms and conditions are complied. Of the stipulated documents, the most important one is the transfer document. The next important is a commercial document called invoice, and third would be the insurance. Sometimes approval, sometimes not. A commercial invoice is a normal term used in commercial transactions. It must appear to have been issued by the beneficiary. The beneficiary of the credit should be the party who issues the invoice, and the invoice should be issued or drawn in favor of the applicant of the documentary credit. It should be made out in the same currency as that of the credit. If the credit is in dollar, the invoice should not be drawn in euro. If it is drawn, it should also show the dollar equivalent. The invoice need not be signed as a matter of trade practice unless the credit recurs. That is why nowadays you can see letter of credits calling for manually signed commercial invoices. Bank may accept a commercial invoice issued for an amount in excess of the credit amount. Banks do accept commercial invoices drawn for an amount in excess of the credit amount, provided the amount honored or negotiated or accepted under the DC is not over and above the credit amount. If the credit is for 100 and the negotiation is for 100 but the invoice is for 110, it can be accepted. Negotiating bank can accept, and if they have honored or negotiated, issuing bank will not raise a question. If issuing bank has honored, the applicant should not raise a question. And the decision of the nominated bank or the issuing bank or the confirming bank will be binding on all parties when the invoice amount is over and above the letter of credit amount, but the amount of negotiation, the amount of honor, the amount of draft, if any, the amount of acceptance under the LC is within the letter of credit amount. The description of the goods, services or performance stated in the LC should correspond to what is stated in the commercial invoice. The commercial invoice should indicate the goods, service or performance, and whatever is indicated there should correspond to what has been indicated in the credit. Insurance document. Insurance document can be of 2-3 types. One of the documents that we normally see is an insurance policy, which is a jumbo document. Another is an insurance certificate, which is a summary document, and the third is a declaration of under open cover, where there is an for a long term, for a high value, there is an insurance cover, and periodically, depending upon the shipment or the movement of goods, there will be declaration made for coverage under this open cover. All the 3 types of documents are acceptable under a documentary credit, irrespective of what is called for by the credit, unless something is specified. The insurance document must appear to have been issued and signed by an insurance company or an underwriter or their agents or proxies. The insurance policy or the certificate or the declaration that is submitted to the bank under the LC should appear to have been issued by either the insurance company or the underwriters or agents or proxies. The signature by agent or proxy should indicate that it is an agent who is signing and on whose behalf they are signing. It should say as agents for insurance company or as agents for the underwriter, and indicate the name of the insurance company or the underwriter, because they are the people ultimately responsible for paying up in case there is a claim. If the insurance policy is issued in more than one original, all the originals has to be present. Cover notes will not be accepted. Cover notes are an indication that insurance is being arranged, and these are normally issued by the brokers, and brokers are acting as agents for the party who is asking for insurance and not as a party who is actually underwriting the insurance. Accordingly, broker cover notes will not be accepted under the documentary credit. The policy is acceptable in lieu of insurance certificate or a declaration. Policy being a jumbo document, an all comprehensive document, it is acceptable in lieu of an insurance certificate or a declaration. But it is not the vice versa. If a certificate is called for, policy will be accepted. If policy is called for, certificate cannot be accepted. The date of the insurance document must not be later than date of shipment. Why? Insurance document is a cover for risk cover during the transit, and if it is dated after the date of shipment, it is possible that the cover is not there for a certain period of time for these goods. So the insurance document should be dated on or before the date of shipment. Alternatively, it should indicate that the risk cover is effective from the date not later than date of shipment. It can be dated as today and it should say the risk cover is effective yesterday, provided yesterday is the date of shipment. The insurance policy should indicate the amount of insurance coverage, how much is the risk covered by the policy, and it should be the same currency as a credit, so as to not to succumb to the fluctuations in foreign exchange rates. The requirement of a certain percentage of the value of the goods in the credit is the minimum amount of coverage required. If the NC says 110% insurance, 110% is the minimum required. It can be for 120, there is nothing wrong. Especially when we have a transferred credit situation, we will find that the insurance will be for 120% or 121% of the value of the second beneficiary's invoice. The insurance cover, if the credit is silent, should be at least for 110%. At least. This is a minimum for 110% of the CIF or CIP value. Cost insurance and flight, or cost and insurance, carriage and insurance paid up to this value. If this value cannot be ascertained, it should be for the gross value of the invoice drawn, or the amount for which the honor or negotiation is requested. The insurance policy should cover the risk. What risk? The risk that has been called for in the credit between 2 points, the point of taking in charge and the point of final destination. It could be port to port also, depending upon the situation. The credit should state what type of insurance is required and what are the additional risks to be covered. If the credit does not state the type of insurance required or additional risks to be covered, whatever insurance document is presented, it will be accepted. If the credit uses imprecise terms, what's an example of imprecise terms? Usual risk. If the credit uses imprecise terms, document presented will be accepted as it is, without regard to the risks that are not covered. So usual risk cannot be interpreted as risk number A, B and C, and so whether C is covered or not, the banks will not be checking up. So the credit should state what type of insurance is required and what are the risks to be covered. The major risks are SRCC, strike, riots and civil commotion, maybe JWC, jettisoning and washing on board, theft, pilferage and non-delivery, TNPD, or millennium clause, terrorism, war. So many risks are normally covered. If the credit requires all risk, the document accepted will be the document that contains an all risk notation. If the credit says all risk, we don't know all means what, A to Z or A to Y or A to X. We don't know what is all. Nobody knows what is all, because all can be interpreted by different party in different situations as differently. So we will accept a document that has a notation called all risk, whether or not bearing the heading called all risk. It's only a notation required as all risk, not a heading, and it may exclude some of the risk and it is acceptable. It will say all risk and then list maybe some of the risk, and then will say terrorism risk excluded. Still we will accept, as long as the credit does not say terrorism risk has to be covered. The policy may contain, or the insurance document may contain, reference to any exclusion clause. Exclusion is terrorism risk not contained, millennium clause not contained, war risk not covered, things like that. And the insurance document may indicate that a cover is subject to franchise or excess. Franchise or excess is that in case there is a claim, in certain situations 5% of the claim will have to be shared by the insured party, and 95% only the insurance company will pay. In other situations, up to 5%, the insurance policy will not pay anything to the insured party, but when the loss is more than 5%, 6, 7, 8, 9, 99, 100%, the whole amount will be paid by the insurance company to the claiming party. So this is what we have seen about the insurance. Thanks for watching this video. We shall meet again in part 6 to discuss the transport documents article.